You want something that's going to spark the inflation debate and the inflation conversation? Well, there it is, folks. I've always told you that energy prices are the ultimate leading indicator when it comes to inflation, energy costs. And yet this picture looks very bullish. I don't know. I guess maybe we don't have market structure quite yet on the other side of the trend line, but any kind of W that forms now that we are on the other side of this trend line, look out. I hate to say it, but it does look to me like crude oil's trying to W bottom. In fact, we can even start drawing some price objectives, right? We could do one off of this range here. Let's go chaos. Boom. 2.618. $80 and 89 cents. 4.669s. Oh, Jesus, that's going to take us right back up to the top. New highs in it. You want something that's going to spark the inflation debate and the inflation conversation? Well, there it is, folks. I've always told you that energy prices are the ultimate leading indicator when it comes to inflation, energy costs. And yet this picture looks very bullish. I don't know. I guess maybe we don't have market structure quite yet on the other side of the trend line, but any kind of W that forms now that we are on the other side of this trend line, look out. And probably like price objectives, I think you could do something along those lines there and something along these lines there. And actually that trend line there lines up nicely with 2.618. And in a weird sort of way, we've been talking about, the stock market, maybe, January barometer ending January kind of on a weak note. Well, you can see there's February right there. This is, what's that, 16th, 17th, 18th, 20th right in there. Not very long until the end of the month. Could we get a nice little pop up here into trendline resistance? Would make perfect sense. We can also do things like fibs. So if we go there to there and reload zones, what a surprise. We are basically flirting with 38.2s right now. And look how 2.618 is right up into that basically the sweet spot, I like to call it, of the reload zone. I don't know whether you could get one of your ICT Huddleston kind of fair value gaps. Is that? It's kind of a weird one, but it could very easily be something like there to there. And then this little window right in there. And also notice, oh, what a big surprise. There's Mountain Man there. Probably a revisit. There's probably a huge liquidity pool in the oil pits, like right in there. Point here is that this price appreciation, which is going to be like a good 10% or so, up into the mid to low 80s. That is definitely going to be interpreted as inflationary. So, caveat emptor, buyer beware. It looks like we're back into inflation talk. We had actually a really nice window there where we were kind of outside of the inflation talk window. That's sort of the end of August through to January is usually a deflationary window. And that window now looks like it has come to an end. Interesting, off of this huge W here, 2.618 is nothing more than just a revisit to new highs. And if we get the price to crank up there, Jesus, that's going to be like 20-30% higher. That is going to be very, very inflationary. So there's your backdrop. Hopefully you heard one word in particular, and that should lead you to understand what the other market that I think needs to move down if this moves up. How about the bond market? Interest rates. Wouldn't that make sense? If this is inflationary, what should interest rates do? They should probably go up. If interest rates go up, then that means bond prices must go down. Thank you, Andre. Rather than me just spit out, well, this is what I think is going to happen, let's just go see. I mean, do the price charts agree with that? I don't know. Do you see any letters of the alphabet, especially on the long bond, right? Because that's the most inflationary sensitive. I don't know. Is there a letter of the alphabet that might be jumping out at us here? Do you see that? So, we had said that the Fedsters and all that, they had come in and sort of kind of reduced their quantitative tightening, because they saw that the inflationary pressures were abating, things like energy prices were coming back down to earth. Now that energy prices look like they're heading back up, I mean, I hate to say it, folks. I mean, that's about as clean an M as you're going to get on an intraday chart. Like if I was a swing trader, that's got a trade written all over it. So 2.618, it's interesting how all that is a revisit of this key support low. If we do get that revisit of that key support low, hopefully you can see, well, that's just going to create nothing more than a head and shoulders. Pretty straightforward stuff, eh?